the rental market. This has been something that we've been watching for a while now. And it's interesting that you've got Bloomberg here reporting that it's 12 straight months in a row where we've seen the asking price for rents is dropping. We've been watching this on the Toronto board as well through our Habistat system, seeing rents coming down. We've talked about purpose-built rentals starting to come into the market more. But Matt, what's your big takeaway here as we've been watching the rental market, particularly from an investor eye?
Yeah, so I think that a lot of rental properties were in the pipeline to get built over the last couple of years, especially in the Ontario market where we changed the rent caps in 2018. Any properties built after 2018 don't have the rent cap. So that incentivized a lot of people to start building rental properties. That was one of the incentives. The other incentive was that they realized that the government was bringing in a significant amount of people. So they started to build even quicker these purpose-built rentals. And also people were buying up single family homes, putting 1 or 2 units in them and renting them out as well. And then the government decided, well, you know what? We were actually bringing in a lot of people, so we're going to scale that back too. So now we have a bunch of properties hitting the market, rentals hitting the market, and it is starting to bring prices down now as these purpose-built rentals start to get completed and put into the system, which should continue to happen into 2026 as well. So lower rents is actually a good thing for inflation because one of the metrics in inflation is rental prices and the cost of housing. So that is bringing that section down for at least now. So it should help anchor inflation and potentially help rate cuts happen and come down a little bit more if you have rentals coming down, the price of rentals coming down.
And I think it's important to note that supply is rising across some of our major cities, right? Like looking at Toronto, Vancouver, and Calgary in particular. And when I think of Toronto and Vancouver, I think about just the change in immigration policy, how we're scaling back on that after opening up the doors so widely and bringing so many people in. And then changes to how we're looking at students, right? Our international student numbers are declining. And there was a lot of investor-focused built condos in Toronto in particular that we've seen are now flooding the condo market on resale as the amount of students looking for rentals and the amount of people in general looking for rentals are no longer there. And that's why that supply is opening up. But what it does, when I look at that from my point of view, is it trickles then into our housing market in terms of I need more people that have equity in their condos to use that as their stepping stone to get to the next house. And when the equity's declining in that market segment, it doesn't trickle up and it's harder for them. And the real reason why they don't have that equity is there's so many of the investors that are dumping their units that's bringing down the pricing in that particular segment of the market.
And also with rentals, the lower rental prices get to, it does tend to drive people out of purchasing just because the rental cost gets cheaper and cheaper. So in order for a renter to buy a condo or their first property, rents and the monthly cost of owning that property, they need to justify potentially spending that extra money in purchasing their own property. So I still think that there's a decent, these aren't falling off a cliff. There's too many. The absorption is still there. It's just not as high as it was before. So we are starting to see, prices have come down 5 to 6% year over year. It's not a large amount that we've seen with the regular market where we've seen, prices come down quite significantly, but so that's one thing to keep an eye on as well.
Yeah, absolutely.